Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, I've got a super exciting update for you. We actually talked about this company or stock about a month ago on the channel. At that point in time, it was called Rockshield Capital. Now since then, they've done a rebrand, they've changed their ticker symbol. They're now called the Eat Well Group. And ever since that initial video came out, you guys, this stock has been on an absolute tear. Now, in addition to that, they have some big news. They've updated their investor presentation, so we've got a ton to cover today. Before we do, please make sure you take a second to smash the like button, you guys, especially for these smaller cap type of companies. It really does help get this content to other people like yourself who may find value. In addition, feel free to subscribe to the channel, McNallie Money, and let me know in the comment section below if you've heard of Eat Well Group, if you're currently holding shares, and how you think they stack up to the competition moving forward. Now without further ado, let's get into today's video. Okay guys, so that's right. Today we're going to be providing an update on Eat Well Investment Group. Now this is a stock that we've talked about on the channel in the last couple of weeks. It was under a different ticker symbol. We're going to talk about that in a second here. This is a super exciting company for me, you guys, for a number of reasons. So obviously, as you can see with the 6-month chart here, this is a company that was trading in the 50-cent range just back in the end of July. They've been on a massive run. There's a ton of news that's come out about this company. They've rebranded. They've got some huge new partnerships and brand ambassadors. So in this video, you guys, we're going to talk about my bullish thesis on Eat Well. We're going to look at their revised investor presentation. We're going to talk about some of the news. And then funny enough, we're actually going to compare this company and their share price to some of the other competitors in the vegan or plant-based food space. Interestingly enough, you can see one of them on the right here, the Very Good Butcher. This is one that we're going to be directly comparing to towards the end of the video. Now, in terms of share price movement, this is as of close on Friday last week. So you can see September 10th, they were up 12 cents per share, closed out the session at $1.19 Canadian, which represented a move of just over 11% on the day. Now, we've been really lucky on the channel recently in the sense that we've had a number of big picks in the small cap Canadian penny stock place, and Eat Well, or Rockshield Capital, as it was formerly known, is definitely one of the best over the last couple of months. And as we go through this revised investor presentation, hopefully you're going to start to see exactly why that is. Now, for those of you who missed my initial video on RKS or Eat Well Group, I did want to give just a quick intro as to what this company does. So they originally set out as a venture capital or VC type of firm. They've now narrowed their focus to the plant-based protein space, and they've had a number of big acquisitions that we actually talked about in that last video that have now combined to form the Eat Well Group. And based on those different components coming together, Eat Well Group is now a fully integrated plant-based seed to market. So this is one of the ways they've really differentiated from others in this space. So we're actually going to look at that in this video. Company with a goal of ensuring that their customers and the planet eats well. And we're going to expand on what it is that exactly means in a couple of slides here. But first, I did want to talk about the name change and ticker symbol rebrand that we just witnessed with Eat Well Group over the last couple of weeks. So here's the official announcement that came out on August 30th, stating that Rockshield Capital is now going to change their name officially to the Eat Well Investment Group Incorporated. Along with that was a ticker symbol change, so they switched over from RKS to EWG. And as mentioned, this change was made to more appropriately reflect the company's previously disclosed updates and really their shift of focus to the agribusiness, food tech, and plant-based food industry. So realistically, they started out as a VC firm or an investment group. They made some big acquisitions in the plant-based food space or agri-tech, food tech industry, and now they've changed their company name to reflect those investments. And similarly, they've also traded their ticker symbol in on the US side of things as well. So you can see that they've rebranded from RKSCF to EWGFF, which took effect on Tuesday, September 7th. So if we now jump over to the YouTube channel here, you can see my initial coverage on RKS or Rockshield came out just about a month ago. This was a video here, listed as a top Canadian stock under $1. Now obviously this company is no longer trading at under $1. This video had just over 500 views, so not a ton of attention, but for those of you who were able to catch this video and hopefully initiated a position in Rockshield, you've definitely done very well. And if we open up this link and we take a look at the video, you can see at the time this was filmed, RKS was trading at 78 cents, and that was after a major 22% day of 14 cents. So I originally was able to pick up on RKS at about the 64-cent range. Now since then I have initiated a position, so for full disclosure, I am a shareholder of RKS, or now known as the Eat Well Group. I was able to get in at an average share price of 99 cents, and I personally think there is still a ton of upside potential in this company. I'm actually looking to rebalance some of my other positions in the plant-based food space and actually invest more heavily in Eat Well Group moving forward. So congratulations to any of you who were able to catch this video and take action and get in on this massive move that we've seen with Rockshield or the Eat Well Group. Now, in addition to the big news about the rebrand, the ticker change, there's also a major announcement in regards to a new strategic advisor for the Eat Well Group. This came out on Thursday, September 9th, and they've actually managed to add a Prince of Saudi Arabia to their strategic advisory board. Now here's Prince Khaled here. He's actually known as a pioneer in the plant-based food investment community and has backed a number of plant-based food or plant-based protein startup type of companies. Now in our initial video covering Rockshield, we talked about some of the big reasons this company is so passionate about this space, so protecting the planet, protecting animals, protecting people who are actually consuming these products. And those are the same drivers or passions that Prince Khaled actually has and lists out in this article. So food security, human and animal welfare, and battling climate change. So very well aligned in terms of their overall vision and mission. And you can see comments from Mark Anid, who's the president of the Eat Well Group. We're incredibly honored to have Prince Khaled join Eat Well Group as a key strategic advisor, shareholder, and genuine supporter of our long-term ambitions. So I think that's super important to call out. He's already invested in the company. He is a shareholder. And again, their mission and vision really aligns with his core philosophies. Now, another thing that Prince Khaled called out in this article was really the scale at which Eat Well Group is starting to transform the food system and food delivery industry. So just within the past year, Eat Well Group's portfolio of companies sold over 26,000 tons of pure plant-based protein to 35 different countries around the world. And that action alone saved the environment over 89,000 metric tons of methane, which would have been produced had this been traditional animal-based protein. So although this is a relatively young company, it's a smaller microcap type of investment, they're already making major waves in the industry and have a global reach that a lot of their competitors are just starting to try and build. So now that we've covered the recent run in share price, we've talked briefly about the news and the rebrand of this company, we're going to jump over to their new website so you can see a very fresh new look and feel since our last presentation or last video on Rockshield. And if we actually jump into the new investor deck presentation, now we're going to start our deep dive analysis on their actual underlying business model. So mission statement with these guys, our mission is to create a company that feeds families globally. So again, that global presence, which we just talked about, while honoring time-valued health and wellness traditions to maximize shareholder value through cornerstone partnerships and strategic investments that are really looking to bring transformational change at scale to the plant-based food ecosystem. And that's the exact essence of that comment from the Prince that we just read out. Now, what's allowed Eat Well Group to ramp up to such big scale in such a short amount of time was really two key strategic acquisitions that took place at the start of August. So this is really the catalyst that caught my attention and prompted that initial coverage on this company. So you can see here on August 3rd, Eat Well Group announced the company has completed two major purchases or investments, which are Bell Pulses Limited and Sapientia Technology LLC. Now between the two, they're forecasting $60 million in current year revenue, so 2021 revenue, which really puts them miles ahead of a lot of the other plant-based protein type of companies that we've talked about on the channel. And towards the end of the video, we're going to show a really handy comparison chart that's actually featured in their investor presentation that shows how their revenue stacks up to some of these others in this space. Now again, we see the term ESG in this presentation. This has really become a key theme on my channel, you guys. So environmental, social governance, and really investing in companies that not only can deliver shareholder value, but are also helping to shape or form positive change in the world we live in. And as a new father, you guys, this is something that's really become important to me. Not only do I want to invest in companies that can make me money, but I also want to invest in companies that I can feel good about and that are helping create a better planet for my son when he grows up. Now, in our initial intro, we mentioned how this has now become a vertically integrated company, and we use the term seed to market. So a lot of the other competitors that we've looked at in this space, whether it's the Very Good Food Company, Beyond Meat, Impossible, they're really heavily focused on the CPG or the end packaged consumer goods section or area of this industry. However, at Eatwell, they're really focused on a lot of the core inputs. So things like extrusion, pulse fractionation, which we're going to look at in a second, processing, and the actual genetics behind the crops and plants that go into this food. Now, they've also got a really robust IP or intellectual property component to their company. They've got 4 patents, they've got proprietary formulations, various trademarks, and a portfolio of intellectual property that's continuing to grow. And then finally, as their market division, these are the customer-facing products, so the CPG, consumer packaged goods, plant-based alternatives, and proprietary snacks, which we're going to talk about and look at in more detail in a couple of slides here. And this is another view or look at how this vertical integration actually looks in practice for the Eatwell Group. So you can see they're divided into 3 key components or pillars. They've got the Agribusiness division, which is really that Bell Pulses unit or pulse processing. They've got their Food Tech division, which is centered around that Sapientia Technologies acquisition. And then their Market division, which again is customer facing. And this is really broken out into 2 sections or brands, the Sapientia Food Tech and also the Eatwell brand, which are both focused on bringing plant-based food alternatives to the general public. So for those of you who maybe didn't catch that initial video we did on Rockshield or aren't super familiar with what pulse processing actually is, I know I wasn't up until I actually started researching this company. This is really the bread and butter of Eatwell Group at this point in time. So they actually acquired 100% interest in Bell Pulses. Bell Pulses is already an award-winning processor of pulse crops here in Canada, and pulse crops are really the core ingredient or material that goes into a lot of these plant-based protein products. So pulse crops include things like dried peas, beans, lentils, chickpeas, which are then put through a process called fractionation and extrusion, which then turns these raw ingredients or crops into the proteins that are used in the majority of plant-based products on the market today. And you can see some of the big global brands which use these products: Beyond Meat, Nestle Global, and Ingredion, which is actually the largest ingredient supplier in the entire world. Now, in terms of their facilities, there's currently 2 up and operational, both located here in Canada, you guys, and between the 2, 93,000 metric tons of annual processing capacity. So definitely very robust operation, and this is where that big revenue number that we're going to look at in a second here is really coming from for the Eatwell Group. And perfect segue to this slide, so you can see $60 million of forecasted revenue in 2021 from Bell Pulses Limited. They were founded in 1978, so they've got 40 years of experience in the industry, estimating $15 million of gross profit in 2021. There's the 93,000 metric ton capacity. And although you may not be familiar with this company or brand, you've probably already eaten a lot of their products in various different consumer packaged goods, including crackers, snacks, pastas, breads, plant-based meats, so things like Beyond Meat, milks, and beverages. Now, because of the big push we've seen globally in regards to the plant-based protein space, Bell Pulses is actually coming off their busiest year in the company's history. So in the 40-year history, 2020 was actually the busiest the company had ever seen. They ran 24 hours a day, 5 days a week at both facilities to keep up with the surging demand. And they actually call out that the growing demand for split peas has prompted numerous expansions at these facilities. So this was already a thriving business that was hitting production records in the last couple of years, and Eatwell Group has now acquired them and folded them into that bigger business unit or overall vision for the company. Now, the other side of the coin here, or the other big acquisition that we had mentioned, was Sapientia Technologies, and this is really focused on the other end of the spectrum, so the market division or the consumer packaged goods. And Eatwell Group has really identified plant-based snacks as the area of opportunity that they're going to aggressively attack and focus on over the next couple of years. So they identify a couple of key reasons as to why plant-based snacks is so attractive. So the first point here is really about total addressable market, or TAM. They estimate the global snack market to be worth just about $440 billion. That's as of 2018, and they expect a compound annual growth rate just over 6% through to 2025. So huge addressable market here, you guys, huge opportunity. Now the second point, nearly 3 in 5 consumers, so about 60% of consumers, are now actively choosing low sugar products to help support general health. I know my family definitely fits into this category. We're starting to swap out a lot of the snacks and stuff that you find in our pantry for healthier, low sugar and low calorie alternatives. The third point here, they call out some big merger acquisition type of activity. So Hershey actually just bought Lily's Confectionery June 28th of this year for $425 million. So there's a lot of activity and consolidation in this space. Another big one we saw in October of last year was a $400 million acquisition of Smart Sweets by TPG Growth. We're also seeing a lot of investment dollars flow into this space. So Motif Foodworks was actually able to raise over $250 million to really enhance the flavor and performance of their plant-based foods. And then the final point here, the vegan savory snack market is poised to be the next major structural snacking opportunity within the plant-based foods market. So this is something we've started to see with the competitors. A lot of them are going after the traditional meat alternatives, so burgers, sausages, smokies, whatever the case is. And Eat Well Group feels like the snack area has really started to become overlooked and is a huge area of opportunity within this space. So that being said, launching in Q3 of this year, Sapientia, or the Eat Well Group, is looking to introduce a number of new snacks into this space. Now, a couple examples of these are plant-based salted snacks, so they're pea curls, meat alternative snacks, cereal or grain-based snacks, plant-based snack bars, and fruit and nut type of snacks. So all of these fit within or under the vegan banner, and they're really meant to appeal to a variety of different customers, whether you're looking for a sweet or salty snack. Now, in terms of the total addressable market on just the vegan snack market, they estimate that to be in excess of $73 billion by 2028. So again, a huge market opportunity here, you guys, and a space that I personally expect to continue to grow for years and years to come. So now that we've looked at the business model, we've talked about some of the big news at Eat Well Group, I wanted to look at some of the numbers here, you guys, and talk about why I think, number one, this is such a great investment, and number two, why there's still so much upside in this name. So the first page here really talks about share capitalization. Now, a couple things I wanted to point out on this slide. So number one is you can see a big portion of the shares are actually linked to performance goals, specifically focused around $100 million in annualized revenue. So that was one thing that caught my attention, you guys, is the leadership team here is directly compensated for hitting those big revenue milestones. The other thing that was super encouraging to see as a retail investor is between the insiders, management team, and strategic investors like Prince Khaled that we talked about at the start of this video, over 68% of the shares are actually tied up or already spoken for. So that means out of the entire float for this company, there's only 32% of shares that are available for the general public to trade and hold. And I think that's why we've really started to see the share price accelerate so quickly here, is as more people start to become aware of this company and the vision that Eat Well Group has, and because there's not that many shares available to be traded by the general public, the velocity and torque that we can start to see with the share price growth here is really quite impressive. And I think that's definitely going to continue as this company becomes more and more mainstream. Now, the other number that I love on this page is the revenue projection for 2021. So you can see the big $60 million number here, and that's exactly what we're going to talk about in the next slide as well. So this is a comparison chart that I talked about in the initial intro to this video. It does a really good job of comparing Eat Well Group to some of the major players, so the large caps in this space, whether it's the Oatly Group or Beyond Meat, some of the mid-cap players like Tattooed Chef. This is one, Tattooed Chef, or TTCF is the ticker symbol, that's received a ton of investor or retail investor attention over the last couple of months. I know there's a number of big YouTube channels, Financial Education Jeremy, for example, that are really pushing this company. Now, I'm extremely bullish on a number of these companies, so I do hold shares of Tattooed Chef and Very Good Food Company as well. But if you start to look at the company's enterprise value compared to their revenue projections, you can really see why Eat Well Group is so undervalued and so attractive at these levels, despite that big share price move we've seen over the last month or so. And that's exactly why I mentioned I am looking to move or rotate some money that I have in my portfolio in companies like TTCF into Eatwell Group, because I want exposure to this space, but I think that EWG definitely offers bigger returns and more upside potential at this point in time. Now on the bottom half of the chart here, you can see some of the small cap players in this space as well. So these are companies with under $500 million enterprise value. So Burcon Nutriscience, the very good food company, which we've covered on my channel as well, and Laird Superfood Incorporated. Now keep in mind, these numbers are as of July 30th, so they have definitely changed over the last month or so. But if you look at the final column here, which is really a valuation multiple comparing enterprise value to 2021 expected revenue, you can see the average for this industry is sitting at 11.7x, or just about 12 times enterprise value to revenue. And the Eatwell Group comes in miles below any of the other companies or the group's average at 2.4 times enterprise value to expected 2021 revenue. And despite the growth and move in share price that we've seen over the last month, their valuation multiples still look extremely promising compared to any of the other players in this space, hence why I'm looking to rotate money within my portfolio to Eatwell Group. So to close things out here, you guys, I wanted to talk about a couple of reasons. Some of these we've already mentioned, that I think Eatwell Group is such a solid investment at these current prices. So first up is the thesis or the mission around this company. So they're a hyper growth company. We just saw some of that big M&A activity. They're right in the heart or the mix of the world's plant-based food ecosystem, and they've got a growing portfolio of, again, that term ESG, environmental social governance components within their company. Second point here is really about the overall market. So vegan and plant-based protein is the #1 global food trend. Already over 35% of the world's pulse proteins come from Canada, and the acquisition of Bell Pulses has really propelled the Eatwell Group front and center within that industry. Third point here is really their focus on intellectual property and creating or designing healthier foods that are better tasting for the end consumer. Those are some of those snacks that we just looked at a few slides ago. The valuation, so we just talked about that on the last slide, $60 million revenue projection this year, you guys, which is absolutely phenomenal for a company of this size. The fifth point, we talked about diversification, which is really how I see Eatwell Group differentiating themselves from others in this space. So they focus on the entire value chain from seed to market, which we mentioned in both this presentation and our last video. And there's currently no other companies in this space that are doing that. The sixth point here, you guys, is growth. So really looking to expand their portfolio of not only products, but also various different markets across the world, whether that's the United States or international expansion. And then the final point here is really around the CPG or the customer-facing products. Again, we looked at some examples in this presentation, and I mentioned the fact that although you may not be familiar with this brand, you've probably already consumed some of their products in some form or another, whether that's in pastas, breads, milks, beverages, or a variety of household items that these products are already found in. So for those reasons, you guys, and all the others that we've talked about in both this video and our last video on Rockshield, I'm super bullish on this company. I think Eatwell Group has really flown under the radar. These new acquisitions and this recent name rebrand are really starting to grab investor attention. And I think this is the perfect time to get in at the ground level and ride this stock as they begin to roll out new products, expand their production, and hopefully fold in more components through additional merger acquisition type of activity to make their brand and company even more compelling in the coming years. Now again, for full disclosure, I am invested in Eatwell Group. My average share price on this guy is about 99 cents, so just below the $1 mark. I am looking to add to that position, and as always, I'll keep you posted on if and when I do decide to add additional shares. So that's it for today's video, you guys. Make sure you take a second to subscribe to the channel if you're not already. Smash the like button. It really does help get this content to other people like yourself who may find value, specifically for these smaller type of companies who don't have a huge investor following. And on a final note, you guys, make sure you leave a comment in the section below on what you think of Eatwell Group if you're currently holding shares and how you think they stack up to some of the other competitors we talked about in this video. That's all for now. Thanks so much for watching and have a great rest of your day.